Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Wednesday, the 21st of April, 2020, and we're after 7:40 at night. I've had a long day. Now, I do appreciate you writing and telling me what markets you'd like me covering in this free version of my SPDR ETF wrap-up. You know I have a subscriber edition, and more of them, your recommendations will go in there. I'm just starting to put some in, so we've got PODX now that replaced THCX. XSD is in there. I added a couple more right here. We've got ESGU. That seems to be one that was popular amongst traders. I didn't include silver tonight, but that doesn't mean I'm taking it out. And some people want me to do some of the other parts of what the silver and the gold are. We'll see. I've got so many, but write me. You can do it either right there on, if you're watching me on YouTube, or you can write me at Epstein at Linn, LL, that's Epstein at Linn, Linn, LLC, Limited Liability Company.com. That's our formal name, okay? All right, so where are we? Well, you're at a choppy part of the market. You had two big days to the downside. Today was a big day up, and early on in the evening at this hour, we're down pretty good in the futures markets. What the markets really did is they held on to what I call that bullish momentum via the slow stochastics. So let's go and see what some of these charts look like. I'm going to start with PAVE because we'll build the chart and then you learn from that what the others are. And here's what I mean. A chart with nothing on it, I think you'd agree. We've got sideways churning action right here. When we put on a swing line, and what a swing line is this line that connects all these parts here, what it does is it helps you to visualize, are we in an uptrend or downtrend? An uptrend's defined as having a higher highs, higher lows. But you can't decide that because you're going to decide all over the board. So what I created was a set of rules, and I created a formula with it. I had a person write me today, Steve, and he was talking about his son who's 14 and he wants to learning about trading. I created this indicator when my son was 13. And I did it because I bet that I could teach anybody to define a trend using this technique and the risk associated with the trend. That's in my charting course. I won the bet. That's what the trend is doing at this point. You're fighting a battle at what line? The line in the sand, DMZ zone, North and South Korea. Markets determine often what they're going to do next from that 18-day average of closes. When you're under it, it's often that they pull to it, over it, pull back to it. That's what you do over and over. And when you stay over it, you have upside bias, stay under it, bearish bias. It couldn't be simpler. That's what I teach in my course. Just this way, I hammer it into you so that you understand these concepts. And I make you draw these lines by hand, even though there's an indicator, so you can visually look at a chart. Even without it on it, you know where you're at in that part. Bollinger Bands are a resistance point developed by John Bollinger. And what it is an algorithm designed to offer you support and resistance zones because the market will trade within the algorithm 95% of the time. You want it to be able to get above it, you want it to hit it, and you want it to get below it. Why? It's offering you spots to come out of the market. That's how I view it. It also tells you if the market locks on to the band, it's getting stronger to the upside, or if it does it on the downside that way too. Not all markets do that. Many of them just kiss it, as I call. This was locking onto it, and then it walked away back down. You'll see that over and over, and again, I teach you those patterns in my course. And then momentum, which broke down yesterday, you can see that, and when it did so, both numbers were still not under 70. Today, still the case. You have an overbought market that is coming up to key resistance at 25.81, and it's been going sideways. Might just churn here for a bit. GameStop, totally sideways momentum action, staying under the 18-day average, so the bias is down. The pattern has been bullish because you got higher lows and higher highs. You have a nothing chart. When the swing line is up and bias is down, they wipe out each other. In XSD, now this is the S&P Semiconductor ETF. You have a pattern of a higher high, lower low. So the first time the market broke down through here, the first support is the 100-day average. The second's the Bollinger Band, momentum turning down, but you don't have a trend on the swing line. You have a higher high, lower low. That is not a trend. Market went down yesterday. Challenges, am I right? That is yesterday. Challenges the 100-day average, and you get a bounce back up today. I'd be looking again for a failure in that general number. Momentum still flat, not turning ahead of the market. SMH, still in the bear side. This is another semiconductor ETF. Lower highs, lower lows. I think the pros are considering short sales right here, right now. Stop would have to be over 253.92. The objective could be in this neighborhood here of 236.95. That'll climb a little. And why will it climb? Because it's going up about $3 a day plus. So it's going to be closer to probably 240 tomorrow, close to this low back here. That's what I think it's going to come in at. Now, POTX. This is the other very popular POTS area. It looks very similar to THCX, but a lot of people like this one over it. So why not do some rotating here? You're running the lower Bollinger Band with an embedded reading that's bearish. End of discussion. Until the red number closes over 20, I say the pros are still selling short. Close that over 20. They'll come out. That's what I think. You got to be over 21. Resistance, if it does a hard rally, back up at the 100-day average, 1492. I was pointing to the wrong one in the 18. They're both the same number right now. ESGU, SQ, I guess it is. We've got the pattern of higher lows, higher highs, and an embedded reading. I think the pros have been buying this pullback. They're looking for the market up in this general zone, and I think they bail if the red line closes under 79. XLE, the energy sector, I said it yesterday, I'm going to repeat. I think that pros got out of all their shorts down here. You're oversold. Sideways action. If you're looking for the follow-through, you're going to probably be hoping it happens. I don't see it. But if it did, let's assume I'm wrong, and I'm wrong a lot. Let's assume it does. Well, then 44.69. But the odds favor it's going to stay in those black band areas. SPY, this is the big boy, still an embedded reading, never did lose it. So I do think the pros bought it there, but I'm telling you, you're starting to get your first weaknesses. You're not even trying to get back up to the Bollinger Band. So cutting positions down, it's probably on the table for a lot of traders. Emerging market ETF, you lost the embedded reading. This was how you looked, and that was Monday. If you lose it, the objective, it happened at one time, is the 18-day average. That's what you'll hear me say over and over. You kept the uptrend. You really haven't made, I believe, the lower low. Maybe I got this wrong. The low on this day, yeah, 77.44, and the low on this day, 77.55, and you've bounced. So you still have the uptrend. What turns the market out and out bearish? I'll give you the number. Taking out 77.54 and staying under 77.62 on a close. You then have lower highs, lower lows, momentum pointing down, putting into play possibility there. That's not a trade recommendation. It's what I think could happen. Again, I'm going to repeat. I'm like Swiss cheese. I make plenty of wrong calls in the marketplace. GLD, embedded reading, bullish. Now you're getting into key resistance between the Bollinger Band and the 100-day average. They're going to kiss each other tomorrow. You watch. How do I know that's going to happen? Because if you take a look, the Bollinger Band number here, watch it right now. It's jumping. It's probably going to jump just right about on top of that, right about there, about $1 a day, right in that area. GDX, get up to this area, the 200-day average, and that I look for stiff resistance. The first challenge of a 200-day average, well, if you go through it here, you found support. Then when you got over it, you kept testing it to see if you could keep going. It's an important average. A lot of traders will talk about it. And I promise you, the press, they're all over 200-day moving averages on TV. I heard them mentioning it again today. Not in that market, but others. TLT, still in an uptrend. So people didn't think interest rates could pull back. And they have. They're back into the, what, 154, 156 area in the 10-year note. Okay, you could get up to the Bollinger Band. The question is, does it stay there? The chart action says yes. I'm a chartist, so I don't put my thinking hat on, but bullish action here, bias up, but you're overbought. My work doesn't say to come into that. FXE, embedded reading, you know what I'm saying. If the market can mount a rally tomorrow, I'd look for strong resistance, 113.10 to 113.29. You'd have to get that red line under 79 to scare me out of that market. Now, each morning, you know, at 8:40, I start recording for you a SPDR ETF video for my subscribers. And I do that Monday through Friday morning, unless there's a holiday. I'll cover short-term swing trades and longer-term trades with weekly charts. And I devote a Saturday video to just weekly charts, giving you the analysis. Now, if I see a trend change during the week on the weekly chart, I'm going to bring it right up. But I'm going to offer you specific. I want you to buy here. I want you to sell there. I want you to take profit at this number. Here's what you do. Unlike what I talk about what the pros are doing, I am a pro, I think. I will tell you what I think you should be doing, and I cover all these markets and more. I'm forever rotating. In addition, I'm bringing out something new. We're building right now the PowerPoints and everything for you. It's going to be calling What's Up. That's what I'm going to call it. So during the week, you're going to be able to come in and visit. You don't need a subscription for that and ask me questions. I'll obviously take my subscribers' questions first. And from there, the general public can come in. They'll be short, 15 minutes or so. Bring up a symbol, tell you what I see. We move on to something else. It's going to be fun. How much does this cost for the subscriber videos? You're getting 6 videos a week, each about 20 minutes long? Come on, $8.95 for the first 30 days. No contract with me. You don't like it, you quit. If you want a 1-year price, we drop it rather dramatically for you as well. What do you got to lose, $8.95? Take a shot at it. I'm Ira Epstein. Have a good day.